You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And we are continuing our tour of fintech conferences for the fall, heavy season going on. And we're going to be featuring this week 3 interviews we did at the TruStage Ventures FinTech Summit a couple of weeks back. Really good conference up in Madison, Wisconsin. Caught up with a couple folks that we've talked to before and had some great updates from them. Elizabeth McCluskey, who is the managing director of the Discovery Fund, a subunit of TruStage Ventures. Gwyneth Borden of a company called Remint, which is the younger of the fintechs we talked to. The youngest, I think, of the entire group just recently was invested in by the Discovery Fund. And John Passanen of a company called Maxwell, also part of the TruStage Ventures portfolio. So we'll be getting into that in just a second. As always, I'll remind you, you can find out more about the Best Innovation Group by checking out our website, big-fintech.com, and all the cool things we do around the space for credit unions and fintechs in the vicinity. Also want to remind you about our town hall, and the next one is coming up very quickly. If you happen to be listening to this right when we post it, Wednesday, October 9th, 3 p.m. Eastern Time, noon Pacific. If you're too late for that, never fear. You can also go out to the website and catch a replay of it. But if you can, it's a great interactive hour-long session where we try to get as much dialogue going across the group as possible. cutownhall.com is a place to go. It is free to attend. You do need to register in advance. I will tell you this week, we've got a really good topic we're going to be diving into. And breaking news, I would say, because this is a topic that's evolving very, very rapidly. John Best and I just talked about this on last week's podcast, the Illinois Interchange Fee Prohibition Act, abbreviated as the IFPA. I like the way John put it, the worst IPA you ever tasted, which I think is fairly accurate. I'm going to be posting another blog on that because we had one that we've updated a couple of times back when this law was initially passed back in July, and updated for a few other things that happened, including a lawsuit that was dropped by the American Bankers Association. Things got really interesting just over the course of the last few days, however. The one that really caught my eye is the Controller of the Currency, the OCC, filed an amicus brief in this one in favor of the bank's position. I would not have necessarily given the animosity that typically banks have. You talk about your enemy's enemy being your friend. It was fascinating to see the OCC send in a brief saying that, hey, this, I believe the official phrase they used was unworkable. This is not a law that they believe actually makes sense in the real world. And their wording in terms of the way they opposed it for a government agency filing a legal brief was pretty darn strong, too. We can post a link to that if you want to take a look at it. All kinds of other stuff going on. Now there's people choosing sides and filing briefs in both directions. There was a piece of quote-unquote research that came out from an Illinois Retailers Association claiming that this program has wide support, which if I look past like the slightest fingernail scratch of the details, just really doesn't hold water. We're going to be getting into all this, and this is obviously, if you haven't been following along, an important issue that goes well beyond the state of Illinois. So that's what we're going to be digging into on Wednesday, October 9th. Join us live if you can, and if you can't, cutownhall.com. You'll find a replay of it there. Anyway, on to our main attraction, TruStage Ventures, the FinTech Summit. Really good conference. There were about 25, I think, companies from the TruStage and Discovery Fund portfolios that got up on stage. No competition this time on these pitches, but relatively similar to the kind of 7-minute approach we've seen before. One of the things I noticed, and this is definitely the topic of the day, I believe, and I think it belongs to be more than just the day, is the focus on bringing youth, bringing down the average member age by attracting more Gen Z and youthful members to credit unions. That is about as critical a call to action that I can think of, and a lot of these companies had ways to kind of scratch that itch. Elizabeth McCluskey is the managing director of the Discovery Fund, which is a subset of TruStage Ventures that actually focuses on early investments in companies led by underrepresented founders that are focusing on the financial inclusion space and solving those problems. So let's have a listen. They've made some great progress, and I think it's a good opportunity for a catch up from the conversation we've had with her a couple of years ago. Catching up here with Elizabeth McCleskey, the managing director of TruStage's Discovery Fund. Elizabeth, we last spoke a couple of years ago at GAC, and I wouldn't say that the Discovery Fund was new then, but you've certainly gone a long way since.
Yeah, it's been a busy couple of years, so I'm excited to have the opportunity to catch up and tell you what we've been up to.
Well, yeah, so thanks for taking the time. It's a busy time here at the Ventures Conference, the Discovery event. But just to remind people, the mission, the investment thesis of what you're looking to accomplish with the Discovery Fund, which is a subset of the broader TruStage Ventures.
Yeah, so the Discovery Fund has been around since 2021, and our mission is to invest in underrepresented fintech founders who are building solutions for financial inclusion. And obviously, given the focus of TruStage and our venture strategy more broadly, we're really looking for fintech companies that can work with credit unions to better serve their members with that mission of financial inclusion.
And you all typically are writing first checks. This is for early pre-seed or seed rounds?
We're typically focusing at coming in at the seed stage, although we've done some pre-seed checks and some of what I call the kind of emerging post-seed round, which has sort of been created out of necessity over the last couple of years. Yeah. But yeah, usually writing checks of $250 to $500K, typically as part of a first or maybe second institutional round of funding that a company is raising.
Okay, a little bit more than I thought, but I knew it was kind of in the sub 1 million range. Let's talk about the environment, because that was one of the things. I mean, it's been, the talk is that fintech funding to a great extent is kind of slowed down, dried up, depending on how you want to talk about it. At the same time, TruStage and Discovery have continued to write checks. Have you seen any difference in terms of deal flow, or a number of kind of compelling opportunities that you see? Is it just more a matter of willingness for people to open the checkbooks?
Yeah, there's definitely been a shift in dynamics over the last couple of years. I think the nice thing coming from a corporate VC perspective is we have that capital support from our parent company, and so we've been able to invest even in these leaner times in the fintech environment. We actually think that's been a strength because valuations have come down. So we're getting into some deals at better valuations than we were in 2021 and 2022. And obviously, especially with the focus on underrepresented founders, there's always a lack of capital available to those early stage companies. So we're continuing to kind of play that catalytic role and seeing some great deal flow coming through, and have continued to make new investments over the last year.
I think I see right now you've got 19 companies in your portfolio, and maybe
pleased to announce a 20th, yes, which we just added a couple of weeks ago. So our latest investment is in a company called Remint, founded and led by Gwyneth Borden, who's a woman of color CEO, and they're doing a debt recovery and credit building solution for consumers, and excited to help kind of get them introduced to the credit union ecosystem, because we see a lot of opportunity for partnership there.
And I think that's one of the keys here too, like you say, sometimes it's a matter of they might not be brand new companies. I think we just talked about Savvy AI, but when somebody needs an introduction, when they see a new channel opportunity in the credit union space, which I'm seeing more and more of these days, that's where it's more than just a check. It's the value add of those introductions.
We like to think so, yes. And I think our companies would say the same. That
this event proves it right here.
Yeah, we really want to be a partner to these companies and help connect them with this great credit union ecosystem that in some cases they may not have had access to or even knowledge of before we come in. And so part of, especially our role at the Discovery Fund, is to kind of educate them about what's going on and the opportunity with credit unions, and be that matchmaker between our portfolio companies and the credit unions who are looking for solutions in these spaces and often just don't know or are overwhelmed kind of by the landscape of options out there. And so we're trying to help curate that selection on behalf of our credit union partners.
That's interesting. So kind of a chicken and egg question. Is it more, they come to, the founders are looking for funding, they see Discovery Fund, they look and they say, okay, this is a possibility. And are you the one that usually says, have you thought about this credit union market? Or have they thought about it and they come to you kind of to try to find out more?
We see both. We've invested in companies who are actively selling into the credit union space and who are identifying us as a strong potential investor and partner because they already have that credit union focus, and then others who are drawn because of our early stage focus on underrepresented founders. And then we kind of are the ones who bring the credit union opportunity to the table for them. So we've seen both, and we've seen success investing in both types of companies.
And speaking of success, we said, 20th company just added to the portfolio. You've actually had 3 more than that, which, it's early enough. What did you say? You started in 21?
Yes.
So, that's in VC world, 3 years is not a long time.
Yep.
But you've already had some, I guess we'd say, graduated it's time for another check, and then they kind of move into the broader True Stage Ventures Fund? Is that what's happening?
Yes, we're very proud. That's definitely part of the goal of the Discovery Fund, is to have companies graduate up to our ventures portfolio over time. And like you said, we've had 3 companies do that so far, which are Pulsate, Beam, which was formerly known as Line, and Zirchu, all of whom are at the conference.
Yeah, I'm familiar with all, and I had not put 2 and 2 together that they'd actually changed categories in terms of where they fall.
Yeah, so those were all actually very early investments we made in the Discovery Fund, so they've had enough time to mature to the point where now they're raising later stage rounds that can be supported by ventures. And so the other exciting thing about that is that we think this is going to kind of inherently diversify the ventures portfolio, because we're getting to a chance to spend time with some of these companies, for several years. And so that's then becoming a really great source of prospective companies for the ventures portfolio.
Interesting. I hadn't really thought about that piece of it. So again, success, given that you're talking about seed rounds, I mean, a company's not going to suddenly, you never know when a company may be acquired. But other than that, success for you, the second check or the next round, if a company reaches that stage, is most likely going to happen at a True Stage Ventures level as opposed to a Discovery Fund level? Is that kind of the premise, or will you write a second check sometime?
Well, yeah, that's a great question, and I think we've evolved our strategy as we've seen changing kind of market conditions over the last couple of years.
Good point. The world's a lot different than 2021, isn't it?
Yeah, so we enabled the ability for the Discovery Fund to write follow-on checks, because we are seeing kind of this longer time span between seed rounds and Series A rounds, and Series A is when ventures typically comes in, but we're often seeing now companies raising another round of funding between their seed and Series A. And so the Discovery Fund has the opportunity to participate in a follow-on investment in those rounds. So about half of our capital that we're deploying this year is going towards follow-on investments in Discovery Fund portfolio companies, with the hope and intention that the round after that will come from the Ventures Fund.
So if people want to find out more, I know you've got the list of the portfolio companies, your criteria, your typical kind of the things you're looking for on the website. It's actually part of the same True Stage Ventures website,
Yeah,
correct?
if you make your way to the True Stage Ventures site, you can find Discovery Fund as sort of a sub-link you can click into. We're also fairly active on LinkedIn, so you can follow the True Stage Ventures page. You can also always reach out to me directly.
Great. Elizabeth McCluskey, Managing Director of the Discovery Fund. Thanks for taking the time to catch us up on this. Thank you.
Thank you, Glenn.
So it was interesting to me. You're going to find even more of this in the next interview with Gwyneth. The extent to which the worlds kind of all came together here in our conversations. I had just caught up with Gwyneth Borden again by email. She won the Best of Show at Finovate Spring out in San Francisco. And when I saw her name, I'm like, wait, I know that name, and I haven't heard from her for a while. And then I went back and looked and saw that she had won the competition as part of the America's Got Access program out at Money 2020 back in, had to check the year also, 2022. So as she put it, kind of a long trail from the time that she was on stage with a very early stage company out in Las Vegas doing that, to the point that they've now gotten funded from True Stage Ventures. Gwyneth had a ton of interesting stuff, and we'll get into a little more detail and some more kind of intertwining lines that kind of cross and converge yet again in my conversation here with Gwyneth Borden. Found another quiet corner here with Gwyneth Borden, the founder and CEO of Remint. Gwyneth, we first met, and as you said, it was a very, very early stage of the process at Money 2020 a couple of years ago. I forget what the name of the program was, accelerator program that you were part of, and here we are again. And, and how you've progressed over the course of those couple of years. Thanks for taking the time.
No, thank you, and it was great speaking with you then. That was the Money 2020 with the America's Got Access pitch competition.
Right. That's what it was.
Financial inclusion. Actually, Dennis Kale, who was also here, Zertu, was the other winner.
Oh my gosh!
Do you remember that?
I've known Dennis for long enough that what an interesting thing that the top two are now part of the whole True Stage world.
It is, and actually it's funny because Starlight, another one of they won the same contest a year later. And they are now a portfolio company.
I did not. Well, this is it's all coming together because Money 2020 is down the road. I had no idea they had that kind of a track record.
No, yeah.
Of, cultivating those or identifying those kind of companies.
Well, it's interesting because Elizabeth was like, we have no affiliation with
Yeah.
that contest, but it tends that we end up funding.
Could
And
be
I
a
think
good hunting ground.
But it's also that contest is about financial inclusion,
Correct.
right?
Correct. And that's the
orientation.
The thesis of the Discovery Fund, which again, as we started to say, congratulations.
Thank you.
You have just finalized the
pre-seed round, and it's been a journey because starting in 2022, and I didn't have a product in 2022. I was starting when I did that pitch. I had these big ambitions. They always say run fast and break things.
Yeah.
Can't really do that in financial services, number one. But also it was just a terrible time to, money got more expensive, fintech funding dried up. If they thought you had too much of a consumer orientation, people weren't interested any longer.
That's a good point. You hit all the hot buttons all at once, didn't you?
And it's just that perfect storm. First-time founder, all of those sort of things. It is harder for women and people of color to fundraise specifically. So you hit all of those things at the same time. And I'm out here trying to pitch my company. So in the last 2 years, it's really been building the business, building up the full business that is like now officially launching and welcoming customers. But it's been a journey to get here. I've learned so much along the way. I think the hardest thing actually has been funding, because earlier people had, because money was distributed so freely in 2021. A lot of people invested in startups around debt space, right? And not
Let's step back and remind people what Remint's proposition is.
So Remint actually helps creditors achieve revenue from non-performing charge-offs, which is the unsexy part, but a very important part. But the other part is
became a lot more important just in the last
really
few
important
months,
now.
Right?
But we also empower consumers to rebuild their credit while repaying delinquent debt. And so I think it's a topic that most people don't really think about. And if you've never experienced extreme delinquencies and charge-offs, you don't understand the whole value statement. And that the issue is that when a consumer falls in distress, like millions of Americans are today, with delinquencies being the highest they've been since the Great Recession, that person sees their credit score tank substantially from the delinquency and then the charge-off. Typically, their other creditors notice that they've fallen behind, and they either close those accounts, severely reduce those accounts, their credit limits, which then further pushes that customer in distress from a credit score standpoint, and sometimes from a financial standpoint, right? So people often fall into delinquency with personal loans or other products before credit cards because they pay and use and pay and use and pay and use. It's almost like they're right now there's the earned wage access where you get early paycheck. For all intents and purposes, people use their credit cards the same way, right?
Yes.
They spend on them after they've spent their paycheck and then, pay it and respend on it. But unfortunately, more people are not paying them off in full, which is the issue that's happening. But when that happens, now this person's delinquencies, debt collectors are calling them. The big challenge for that consumer is not only do they have this debt in arrears, they have multiple debts in arrears, but they are also in financial distress, right? They're trying to rebuild their finances and pay off these debts, but their credit score is also really tanking. So they can't get products that would help them in that process, but they really would like to build their credit. And so that is like one of the key insights that we had as a company that doesn't exist in the ecosystem today. Debt collection is very much about, I call you, I harass you, I get money from you, and I move on.
And that's the end of the transaction.
And that's the end of the transaction. Obviously, that's not great for having that customer return to you in the future. And if you're a credit union and you have these members, overwhelmingly people with delinquencies and charge-offs are Gen Z and millennials, so younger consumers.
Long road ahead of them,
right?
Where they could be very valuable customers with a long credit history.
Absolutely. All of the delinquencies are leading are actually credit products that were opened up in 2021 and 2022, interestingly enough, right? From consumers at the beginning of their credit journey who also had very unstable and continue to have very unstable incomes because of the economy, right? A lot of people coming out of school had job offers rescinded, right? Yeah. As the economy started to tighten, people hold on to their more seasoned employees, and they're not bringing on, as many younger employees. And then on top of that, even when you have job openings, like right now we're hiring, I was hiring for like a more junior roles, but I have extremely senior people that are applying for them because so many people are looking for jobs. So you have people who are early at the beginning of their credit journey, really learning about credit products, and you have an opportunity to come in and try to help them, right? Obviously, you want them to repay their debt obligation, but more importantly, you want them to be savvier along the way. So what's unique about Remint is that we do offer credit building products that enable that consumer that while they're resolving their debt that they then also can rebuild their credit, and that makes them pay a higher amount, right, of their debt that they owe in order to access these products. Then we also layer on personal financial management tools where people can create budgets, set alerts, make debt repayment plans, and then finally have a community where they can connect with experts and peers about the psychological and emotional effects of being in debt. Because debt is not just about knowing how to budget. It really is about your view of money and how you spend it and how you feel.
So the community aspect is there, and you're going to market with this through the financial institutions? I mean, it's before it goes to the collection agency.
So actually, starting out as a new company, banks and credit unions don't just sign up to, to be your first customers. So we actually work with a broker to acquire debt. So right now we are actually buying debt portfolios.
Interesting. Okay.
Which is a really interesting, the market is quite fascinating because there's been such a large proliferation of online lenders. There's so much debt out there. It also means that the cost of debt is very inexpensive right now, which is kind of sad, right? I can buy your debt for pennies on the dollar, but you still owe
what's interesting to me then is then you're reaching out, and as opposed to the usual, as you say, transactional, you've got to somehow get the message across that that's not my game.
Yeah.
I want to do so. And how do you go about kind of getting that across to
the
people?
I mean, I think even in our initial communication.
I'm sure they start off
right,
being very suspicious.
Our initial communication is like, we're different. We want to contact you on the channels where you want to be contacted. We want to support you in your financial journey. If you're having a hardship, let us know. If you want to dispute your debt, it's not yours. We don't want you to pay it. Let us know that. Our orientation is we're really about getting you on a path to a better financial future. And I think that messaging does not exist because, again, in this world, it's very much of the compensation structure of traditional debt collection is typically a credit union hires an outside agency. They get a portion of what they collect. The person who's calling gets a commission and the agency gets a commission. And so there's not a real incentive if you're a person whose job is get commissions from people paying debt to really have any empathy or be able to say to a customer, oh, you can't pay me right now? Call me back in a week. No, that's not the conversation that you're having. The conversation that you're having, what are you paying right now?
Right.
And so we really get across that message in all of our communications. We actually do something unique. We do retargeting advertising. So our retargeting advertising on social media, on the internet, isn't like pay your debt now. It's your financial future, that car you want, that house you want, the dreams that you want to pursue that financial independence provides for you. It's taking a very different tact, treating a consumer like a consumer, right? As a person that you want to pay the debt, like you're marketing back to them the lifestyle that they want to have, right? And resolving their debt helps them to get there. And our, again, approach is not about, you're an evil person. There's a lot of fear and shame in debt. And the number one thing that people say is they don't actually want to talk to somebody when they have debt. They'd like to be able to go online, resolve debt in their own terms. And that's what's so unique about our system. Our system is built so it's completely self-cure. We don't have preset repayment plans. People can pick with a floor of $10 a month. They can pick weekly, bi-weekly, or monthly, which actually works really well for people who work gig works or have very inconsistent income. And they can pay wherever they have funds, Venmo, PayPal. It's really just about enabling people to get started on their path of rebuilding their credit and their financial health. The biggest challenge when we were doing like early customer interviews and discovery among consumers was that typically when people have a lot of debt, they don't know where to start, right?
Yeah.
And they just need a starting point. And so that's what we see ourselves as a starting point of being able to help that consumer get on the path to repaying their debt, providing those financial tools to a consumer who clearly is not using those tools.
So you're here at a credit union event,
yes,
and you're being, funded by a group that's primarily associated with credit unions. You're saying right now you're working on portfolios of debt that you've actually acquired.
Yes.
Is this kind of a proof of concept? Is the longer term vision to then offer this service directly through the credit union, or
yes,
is that the longer game?
Our longer game is to partner with credit unions. Credit unions genuinely care about their members and they care about their financial health. They also want to attract a younger demographic. We know that it is hard for a credit union or any other financial institution to partner with a company that's unknown.
Yeah.
And so by learning and practicing and getting better at doing it on our own, we feel like we can provide a superior service to credit unions. So we're starting to lay the groundwork. We're going to be at Venture Tech.
I was about to say, and you all of a sudden, after spending 2 years, all the pieces are kind of falling into place.
Yeah,
right?
so we're creating that pipeline because we really believe that we can be the game changer for credit unions in this ecosystem of as so much competition, particularly quick, easy online competition for those who want and have already younger customers that are falling behind, and be able to do something that actually helps them kind of get back on their feet, they can recapture those members and have such lifetime support, because at the worst point, the credit union that they were a part of didn't use a typical collections process, but they used a process that actually helped them rebuild.
So right now, if people want to find out more, well, obviously, if they go to VentureTech, they're going to see a presentation. But the website is
getremint.com.
GetRemint and remint
And with a Y.
MYNT, right?
.com. Yes, we wanted to make sure from a trademark standpoint we couldn't use remint with an I. And we couldn't do remint.com because somebody had that web URL. I don't want to pay $10,000 for it. But so we're getremint.com.
Great. Gwyneth Borden, CEO, founder, and a very busy woman. Congratulations, and I'll see you again in November.
Thank you so much for the opportunity to talk about Remint.
So I went back to the archives, and I'm going to post a link to this as well. And sure enough, in our coverage of Money 2020, back in 2022, that becomes a mouthful, we actually spoke with both Gwyneth Borden and Dennis Kale from Zirchu, the winner and runner-up of the America's Got Access competition, as part of the same episode. So, and Dennis is, again, also a member of the TruStage portfolio, or the Discovery Fund portfolio specifically. So we, go back into the time machine and about 2 years ago, see where they both stood at that point. We'll post a link to those interviews. And then Gwyneth also mentioned Starlight, a company that, again, is now part of the Discovery Fund portfolio that won the competition in 2023. And was also on stage here at the FinTech Summit. I think it's probably worth catching up with them. I did have a conversation with them on site and doing really interesting stuff. Gwyneth's solution about people who have gotten in trouble on debt and trying to make sure that they just don't get alienated by the process also reminded me of Credit Mountain, which is a company that was one of the Best of Show winners just this past September, just about a month ago, out at Finovate Fall out in New York City. Raynel Pinto is the CEO of that company. And between Starlight and Credit Mountain, I think maybe we might have another episode that may be worth following up on. I'm going to reach out to those two because I think it's an important topic and a continuing conversation that's worth having. So from the newest member of the Discovery Fund and also the newly funded pre-seed company, on to probably the most seasoned of the companies that we saw on stage, also part of the TruStage Ventures, the larger of the two portfolios, but still, companies that are obviously relatively early stage, usually A round, et cetera. John Passanen from Maxwell, which is a company focusing on mortgage lending. And as you'll hear, he had some really great data. He was part of a panel that first caught my attention even before he got on stage pitching his company directly. But interesting stuff, and as we know, with mortgage rates changing yet again, probably a very timely opportunity to take a look at this stuff. I'm here with John Passanen, the co-founder and CEO of Maxwell, which you were on stage twice. You were part of a panel discussion,
right.
And then you were also demoing your products from Maxwell in terms of helping with the mortgage space.
That's right.
And, but first off, from the panel, that's what really grabbed my attention. Some of your data about just how rapidly things have really spiraled with regard to affordability of housing for the average consumer. Yeah. And you threw out some data. So first off, thanks for taking the time.
No, you bet. And I'm happy to be here. It's a message that we like to talk about. Our vision at Maxwell is to turn the tide of homeownership and spread financial empowerment. And so we are very focused on how do we broaden that pathway to homeownership for people. It's so important in our country.
Well, you mentioned that, I guess, for many years, going back to the 70s or 80s, there was kind of a fairly standard ratio. That the average house was about 4x the average income.
That's right. Yeah. So generally, if you talk to folks, buying a home has always been, if you look at the United States, 4 times median income has been the average home
Again,
price.
Median, not average, median, which
median
is more
income
important.
And today we've seen that number increase to almost 9x.
That's just amazing. And it's like kind of overnight, like in the last 5 years.
Really in the last 5-6 years. Yeah, the data I was looking at the other day showed that even in 2019, it was still about 4x median income. And so what's happened is, income growth has moderated and slowed.
Especially on the median side.
On the median side.
You get some runaway numbers at the top.
Home prices have continued to run away, right? Yeah. And increase. Even with interest rates where they are today, home prices are still increasing, right, over last year.
That's a good point. So what you're talking about doesn't even take into account the fact that the average payment, a monthly payment, with a higher interest rate would be even further up.
Even further, yeah. So it's, the housing has gotten more and more and more out of reach for the average American, and it's a real fundamental problem. You know, we have a savagely unhealthy housing market right now, and interest rates have made it more expensive, in addition to the fact that home prices have gone up, right? And so you have this sort of double whammy of a heavier load to afford a home, and then a heavier load on your monthly payments.
No
right?
wonder it's a political issue in
That's
terms
right.
of the election.
That's right. And you know what we've found is that, you know, in our data, if you look at data over the last year, housing has really become very exclusive. In other words, the average FICO score of a home buyer continues to go up. I think it pushed past 711.
And
in
again,
our
making
last-
sense
in our
if you
last
have
quarter.
to, if your average expense on a monthly basis
right.
is going up because of the interest rates.
That's right. And then, you know, the average down payment has gone up as well. So the median down payment was almost $70,000 last quarter, and that's up 7% year over year.
Yeah, it's one thing to talk about percentage of purchase price, but just thinking about who's got the amount of money.
That's right.
Unless you've got generational wealth, someone
right.
who can actually help foot the bill.
That's right. So you've got to put $70,000 down to buy a home, which was the median last quarter. And so, you know, it's becoming more and more difficult to enter the housing market, and it's a problem that we have to solve. We recently conducted a borrower study, and we found that 1/3 of borrowers, about 32% of borrowers, wanted to talk to a loan officer about down payment assistance. How do I get help affording I may be able to afford the monthly payment, but how do I get this down payment nut that I need to be able to afford a home, and honestly, not just afford it, but be able to win the offer, right? Because you're now competing with others that are trying to buy that same home. You know, that seller's looking at, is this person going to be able to qualify for a loan? What's their down payment amount, right?
And if you need assistance on your down payment, it's not really a down payment, is
That's
it?
right. And so, you know, I think that's one way that credit unions and others can really help their consumers prepare, is giving them great advice, having access to down payment assistance programs, being knowledgeable about those, being knowledgeable about even the programs like Home Ready that are offered by Fannie and Freddie that allow consumers to get access. And that's where Maxwell tries to play a role.
I was about to say, so how does Maxwell fit into kind of solving that problem?
And so in our loan officer borrower tools, just giving them exposure to the loans that, you know, would be a good match for this consumer. Being able to look at the different pricing, the different products that are out there is just one way we help, right? Making that process transparent, easy to make a decision, enabling both sides to have all the information they need to move through the process.
Now, are you looking for Maxwell's brand to be in front of the borrower?
Absolutely
or is that
not.
White
No.
label.
It's all white label. We want the credit union or the financial institution to be the hero in the transaction. So it's all about them. You know, we're just there to provide the tools on that digital experience. And
so
then,
how does that like integrate into their CRM? Is it a standalone? How do they actually
so we
access
integrate
it?
into their loan origination system. So today we have 7 integrations with LOSs, and so we have pretty good breadth across the universe of LOSs. And so we integrate with the LOS, all the loan data is transferred. But think of us as that digital experience layer on top of that system of record.
Well, you mentioned that assistance on down payments and things like that. So that's something that, you know, when a prospect comes in, they get enough information and you can kind of serve up. You may want to look at ABC as options.
That's right. So the loan officer will be able to look at all the options that are being offered from that credit union. And then we also have Maxwell Capital, which is where we will buy loans from the credit union as they go through. And so we have a set of investors on our side that want to buy loans, and we can start to craft loan products that we can put in market that are really helpful.
So again, if the credit union is looking to simply originate, or if they're looking to actually keep them on their balance sheet, either way, there's a solution there.
Exactly right. And then we help in the middle, in the back office, processing, underwriting, closing. We can help to lower costs there, which again, any of those cost savings hopefully get passed on to the consumer in terms of lower fees at closing and other things that they can save money on. So that's really where we try to help is the digital experience, the cost in the back office, and then access to a broader set of products like FHA, VA products.
And you've been at this for how long?
So we started the company about 9 years ago.
9.
Yeah.
Okay, so you're one of the more seasoned
that's
veterans in this crowd here at the
That's
Discovery
right.
Conference.
That's right. Yeah, so we've been growing. We work with over 350 financial institutions across the United States. You know, this year we'll touch more loans than the largest lender in the United States, and so we just have incredible breadth of data across, and that's where things like AI start to come into play, right? Where we can start to use our data to teach the machine how to be a great co-pilot for an underwriter, or how to be a great co-pilot for a consumer. And I demoed some of those things from on stage yesterday.
What's your sweet spot in terms of financial institution size? Do you work across the gamut?
Yeah, we work across the gamut, but we've really built our software for the small to mid-size institutions,
Which,
right?
And in your definitions, what the hundred millions, the billions?
Yeah, so typically, our lenders are originating, in the sort of, $250 million to $2 billion a year in originations.
And that's that's a fairer assessment than their asset size, just how active.
Yeah, so asset size, that would be sub $10 billion in assets.
Got it.
We even go as low as $50-100 million in assets if we can help. It's pretty easy to deploy. So,
and the pricing's tiered based on the mortgage originations.
We typically price based on volume, and so you pay us when you get paid. So we align our pricing to close loans and make it very, very easy for them to onboard, and then the systems deploy in typically 4 to 6 weeks or less, and so very easy to get up and running.
I'm guessing very little of it's on premise. It's a cloud-based solution?
It's all cloud-based.
So relatively, if you've got the integrations with the LOS already, it goes pretty easy. So if people want to find out more, what's the best way to do so?
The best way to find out is to go to himaxwell.com, himaxwell.com, and click on some links, explore there, and then fill out a contact form, and one of our team members will be in touch.
Wonderful. John Passanen, co-founder, CEO of Maxwell. Thanks.
Yeah, you bet. Thank you, Glenn.
So there you have it. 3 interviews from a really good conference out in Madison, Wisconsin a couple of weeks ago. We got links to all this if you take a look at our show notes wherever you pick up the podcast. If you happen to be at the website, big-fintech.com, you can go to the media tab and find all this stuff, including, and even if you're listening, I think most of you are probably listening via Spotify, Apple Music, etc., Amazon. If you click through, you should be able to get to the show notes, which have links to follow up and find out more about these companies and some of the other topics that we were talking about, and even our past episodes, like I mentioned with Zirchu and Remint, that we spoke to them back as far as 2 years ago. When you go to other conferences that we're not covering and you hear some interesting stuff, please drop a note. Love to hear, get as much information. If you want to share it, great. If it's for attribution, if not, I'm happy to just have a conversation with you just one-on-one. Again, my name is Glenn Sarvati. You can track me down via my firm, 154 Advisors. You can find me on LinkedIn at Glenn Sarvati or at 154 Advisors on X. You can find the Best Innovation Group at all those same places as well, at Big FinTech on X, Big Best Innovation Group on LinkedIn, and our Grand Poobah at JB FinTech or John Best on LinkedIn as well. We're here with new content every Tuesday. We will hopefully see you again. If you happen to listen to these someplace where you can subscribe, whatever they like you to do, we would appreciate it if you would. As I said, always love to hear from you. Please drop a note. We've got plenty more coming up in the very near future, so please stay plugged in. And as always, thanks for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.